Hey everybody, it's Eric Peltier with Citywide Home Loans. Thanks for watching my Wednesday Mortgage Minute. Sorry I'm a little squinty. I meant to get out here a little bit earlier this morning, but now the sun's pretty high and I'm squinty. Let's talk about rates. Rates sort of have plateaued over the last week or two. Even a tiny little slight improvement the last few days, but I would call it more of a plateau in the middle fours for the 30-year fixed. We're still expecting 30-year fixed rates probably by the fives by the end of the year. The second thing I'm going to talk about, and it's the only other thing I'm going to talk about, is asset depletion. Asset depletion is a way of creating income for somebody, a borrower, who doesn't really have any other documentable income like a job or some sort of self-employment or even getting disbursements from retirement accounts. Okay, occasionally people will come to me and they want to borrow, but they've been living on very little income, and yet they have lots of assets. And I'm going to talk for a second about how we handle that. So my typical route for asset depletion kinds of qualifications is if somebody is 59 and a half or older, they count as a retirement age person. And we can use Freddie Mac on that. We have them get a letter from their financial advisor saying that they're going to take, let's just say, $3,000 a month from their retirement assets. We need to show that they could have 3 years worth of continuance of that. So that would be $3,000 a month times 12 months in a year times 3 years, whatever that turns out to be. I think that's like $72,000 or something like that. So they need to have enough money to do that, and it needs to be in retirement accounts like IRA, 401k. Typically, if they're a retirement, it's IRA. So if they just have a bazillion dollars in a brokerage account, that doesn't work. It needs to be retirement accounts, and they need to be 59 and a half. Okay, let's say that they're younger than 59 and a half, but they have a lot of money in the bank. We can also do an asset depletion that's a little bit more, I don't know, the word is cruel, which is we can just take what they have in the bank and divide it by the term of the loan, which is usually 360 months. And if you think about that, you know, you need $360,000 in a bank account to then equate to $1,000 a month in income. That doesn't get you much. You need like 2 million bucks, which would maybe give you $6,000 a month to really qualify for much of anything that somebody who has that amount of money would want to buy. So there's another route for somebody who's younger than 59 and a half. There's also people who are looking at jumbo and they want to do asset depletion. And for a long time, that was a really problematic realm, jumbo with asset depletion. We do have new investors that have asset depletion programs on their jumbo. They're what are called non-QM, non-qualified mortgage, so the interest rates are a little bit higher, but those are around. So I'm at about my 3-minute mark, so I want to close up here. If you have a client that has no income but lots of assets and they want to talk about asset depletion, please have them give me a call. Love to help out. So have a wonderful week. It's Wednesday the 14th. It's going to be like 70 degrees today. Hopefully you can get out on some of maybe Boulder County's open space here. So have a wonderful day. Thanks.